Hello, and welcome to the first episode of the second season of Focus One. With the 2012 election in the rearview mirror, the biggest political story as we closed the year was the fiscal cliff crisis. Congress was unable to strike a deal before midnight on December 31st, but as their closing act of the 112th Congress, it looks like they may have struck a deal. In order to break down the economics and politics of the fiscal cliff crisis, I've gone to the deep bench of experts at New College of Florida and brought on a couple of friends and colleagues. First, I'd like to introduce Dr. Richard Coe, professor of economics, working on a book on debts and deficits, also the coach of the famed New College Bones softball team, which I proudly play on. Welcome to the show, Rick.
Thank you.
And I'd also like to introduce my friend and colleague, Associate Professor of Political Science, Keith Fitzgerald. Dr. Fitzgerald has also served as a House of Representatives, Florida House of Representatives, served from 2006 to 2010. And viewers might recognize him. You also the Democratic nominee for the 16th district in the most recent congressional race. Welcome to the show, Keith.
Thanks.
Rick, let's just start out and just recap a little bit, or just go back to the fiscal cliff. What is meant by the fiscal cliff? What do they call it, the fiscal cliff?
Well, that's a bit of a misnomer, but what was going to happen if things had played out over the year and nothing had changed, it would have represented about a $500 billion change in fiscal policy, a tightening, about $400 billion tax increase, and a $100 billion reduction in government spending, and that's significant. I mean, that would have been quite a shift. It wasn't a cliff that suddenly, and January 2nd we were going to go down the tubes, but that would have been
perhaps,
a downhill, steep downhill slope, and it would have resulted in a significant tightening of fiscal policy and a drag on the economy.
Okay, so we sort of averted it, and can you walk us through what is in the deal, or what was resolved in this last congressional act, and what wasn't resolved and still remains to be resolved?
Well, I think the two key items is that the Bush tax cuts with regard to couples earning over $450,000 that was allowed to expire, so their marginal tax rate increased from 35 to 39.6%. That's only for the top, I think it's 0.5% of taxpayers. The rate on interest in capital gains, or dividends in capital gains income, went up from 15 to 20%. And then the other key thing is on the tax side is the payroll tax forgiveness was allowed to expire, and so that
was not extended.
Was not extended, and the payroll tax now will increase from 4.5% to 4.2 to 6.22%, and that's a significant increase. I don't believe anything of any significance was really done on the spending side of the equation.
So the automatic sequestration, the automatic spending cuts were simply punted down the road for 2 months.
Yes.
2 months,
Yeah.
Keith, let's talk about, there seemed to be frustration. Nobody on either the Democratic or Republican side wanted to go over the fiscal cliff. This isn't something that is automatically in our governance structure. They sort of did it to themselves. Can we just go back and just recap how we got to this point?
Sure, and I think it is important for everybody to recognize that fundamentally this is a political problem more than it is an economic problem. So it's an artifact of the inability of Congress to do the ordinary business of making a budget. We have had in the United States, for really historically peculiar reasons, a necessity for Congress to set and reset its authority to borrow money. This has been going on since the early part of the 20th century. It was due to a breakdown in congressional presidential relationships during World War I. So it's not something in the Constitution, it's not something that's necessary from an economic standpoint. But Congress continually has to raise the authorized level at which it borrows money. It's usually been used as a kind of a little game that one side will play to attack the other one for not being fiscally responsible. This last time the debt ceiling came about, we basically had a breakdown in the whole governing structure. The Congress could not come to an agreement to raise that because they have a basic disagreement about what the role of government is in the society at large. As a way of dealing with that expediency, they put a gun to their own head, put in place a bunch of rules to stop spending money in all kinds of areas, including the military. That was called sequestration. It had a deadline, and the whole point of that was to put pressure on themselves as members of Congress to come up with some kind of long-term solution to debt issues and deficit issues. But they couldn't do it again. So this is really a political crisis, and I think it may be moving to the point where it's downright a constitutional crisis. We're starting to wonder, I mean, right now, the immediate economic problems we're having have far less to do with the size of the debt load or something like that than it is in the confidence of markets that the United States government is capable of carrying out some of its most basic functions. And that's a really serious problem.
Let's go back, Rick, to the implications of the spending issue. For a lot of folks, they view this as a crisis, the debt load or the deficit. While we were able to reach an agreement on tax rates, not necessarily an overhaul of the tax code, but the tax rates, the spending issue has been punted, as we said, down the road for at least a couple of months. What are the economic implications of our current spending trajectory or our deficit and debt trajectory? Again, this is a book that you're working on. Let's just talk a little bit about the implications, the economic implications, both short, coming out of a recession, and longer term of getting our quote-unquote deficit and debt problem in order.
Well, I think it's important that you make that distinction, the short and the long run. Short run, I don't believe we face any deficit debt crisis currently. If anything, we probably need a little more stimulus, in my opinion, a little more deficit spending to get us out of the recession. And we stopped the stimulus too soon, and we started tightening too soon, and that's why we're on this sort of lukewarm growth path at best. Now, long run, we have issues, in my opinion. I've seen the projections, and you know, the debt to GDP ratio under certain assumptions in 30, 40 years could be at 120%. I think everybody considers that worrisome. I think anybody that's looked at the problem realizes it's healthcare spending that's driving the major problem with the deficit. Social Security can be relatively easily fixed to bring that system into balance. It's a healthcare cost down the road that really need to be addressed. And but I don't think the spending is, I mean, spending is one half of the equation, but I don't think people really realize just how large a tax cut the Bush tax cuts were. I mean, it was the largest in history. We were running a surplus at the time, and people thought we could just give away everything at that time, and we're really going to have to undo a larger part of that than was undone by the current
as you
agreement.
had said, with respect to on the income side, it was less than 1% of people will be affected by that threshold for the increase or the expiration of the Bush rates. One of the things that puzzles me, Keith, walk me through this. With respect to what the Republicans got or didn't get in this deal, it would seem that Boehner's Plan B, there was more in it for them. It was soundly rejected by the House, and then a week or two later, Grover Norquist gives his blessing, and they sign off, or at least a portion of Republicans sign off on a deal that looks like it was even worse than what Boehner was putting forward. Help me, why did they sign off on that? Or
again, it's a completely political problem. It's really not an issue about what the policies are involved. So let me first of all give you a little technical thing that sets up a lot of this problem. Back when Newt Gingrich became Speaker of the House, a historically very important figure, he started running the House of Representatives very differently than it had been for the previous 80 years. It became pretty much a dictatorship on the part of the Speaker, and I don't mean that as a disparaging term. It's fairly common in legislators for a legislative leader to really have an iron hold. When he was overthrown, the incoming people decided to even go further than he did, and the new Speaker instituted something called the Hastert Rule. The Hastert Rule says that nothing will come to the floor out of the Republican majority unless the majority of the Republican caucus approves it. Well, that's sort of a crazy rule given the institutional tendencies toward or necessity for compromise in our system. So what happened here is the president was negotiating with the House. The president put his offer on the table. The House was supposed to come up with a counteroffer. Nobody even thought that was going to be the final deal. But he couldn't even get the majority of his caucus to go along with the counteroffer. At that point, it really took the House of Representatives out of play. They were no longer a viable negotiating partner with the president. And even the Speaker of the House said, you have to go over to the Senate and see if you can get something that we can vote on here. They actually did have to breach the Hastert rule to get that vote to the floor. And one of the things that's going to be interesting going forward to see is if the House Republican caucus is going to continue to operate under the assumption that things don't come to the floor without the majority of the caucus agreeing. Because if that rule goes by the wayside, the possibility for moderate compromise where you have Democrats and Republicans in the middle voting on bills with maybe people on the left and the right not going along could change the whole tenor of policymaking in Washington. And that's something we're going to be looking at as we go forward in the fiscal cliff. Would we deviate from that old rule and allow majority coalitions in the middle to start ruling again, which is really the norm in the United States, particularly after 1910 up until 1994.
What would have happened had you didn't get 85 Republicans to cross over and sign off on this latest deal? Just politically, what would have happened if this was rejected and did not pass the House?
Well, I think one of the strangest things about this whole situation is the lack of accountability on the part of members of the House. So many House members are in safe districts. And so many Republican members in particular in districts where their real threat electorally is from the right, say a Tea Party challenge, as opposed to from the Democratic side, that they don't have incentives to sort of respond to a general climate of public opinion. So I think what would have happened is that the public in this particular case, the polling shows, really were blaming the Republicans in the House. And so the brand Republican was going to take a huge hit. The president's popularity is up. It looks like the Republicans are holding back. On the other hand, if your assumption then is that the Republican Party would pay a big price at the next election, not necessarily so, because a lot of those members are more concerned about a challenge from the right, from the left, so they may not change their behavior. And that's a real breakdown in the feedback you're supposed to get from democracy if people aren't accountable to general public opinion.
And Grover Norquist, I mentioned him before, a peculiar figure in American politics, but I think one whose importance can't be undersold in that, as I think you accurately note, many, if not most, House Republicans are worried more about a challenge from the right in the primaries than they are from a challenge from the left in the general election. If Norquist doesn't sort of sign off on something, on the pledge, again, the vast majority of House Republicans have signed off on a no tax pledge. So if he interprets a vote as a violation or breach of that pledge, it really puts House Republicans at risk. Interestingly, again, with respect to this latest deal, Norquist said that it was okay because technically at midnight at the end of the year, the Bush tax cuts expired and everything that was done, even allowing tax rates to go up for the highest income earners, that was technically a tax cut because of the expiration date on midnight. I guess Norquist, as ideologically driven as he is sensitive to some of the political implications. Had he not done that.
Interesting, because I always tell people that Grover Norquist may have been over the last 20 years the most powerful non-elected political figure in the United States. I mean, setting aside maybe the Supreme Court.
Ben Bernanke.
Ben Bernanke, certainly, but very, very, very powerful guy, and not just on matters of taxes, by the way. I mean, he's been part of the team that works with Roger Ailes and Karl Rove to coordinate message on all kinds of issues. He's a very, very important figure. Most people don't know who he is. But on this one, I think that what he recognized is that even his power is conditioned by public opinion at the end of the day. So there's no question that this overall was a revenue increase that really didn't do much to reduce spending. Basically, the president's side won, and they won because public opinion was on their side in this particular instance. And Norquist really had to come up with, I think, a fairly transparent rationalization to explain that he tried to claim that he wasn't going back on his no tax pledge, when obviously he was giving him a pass, and there's no question about it. And that means there's a condition, a limit on what his power is as well. And it'll be interesting to see if he really retains the mojo, because he used to be all powerful and all feared. The people felt like, on the Republican side at least, if they crossed him, they may be finished. Well, now he doesn't look like quite the credible, scary figure he did in the past.
Go ahead.
If I could interject here, though, I think this agreement was actually a major victory for the lower tax crowd, in that 99% of the Bush tax cuts has now been made permanent. Now, that's an odd word in the sense that any future Congress can change it, but now it's shifted from they were going to expire and you had to, and that was the default option, to now the default option is that those tax cuts are now in place, and they're in place not on a temporary basis. If those rates are going to be undone, somebody will have to vote for a tax increase now. Right. So that whole dynamic has shifted, and basically Bush won. Most of his tax cuts have been,
I think that's an excellent point with respect to the scope of cuts that have been made permanent. And you're right on. You're spot on with respect to, especially in our political system where you get a lot of gridlock and inertia. The semantics issue, as opposed to temporary and permanent, is not as, I think, important as they are. That's what's on the books now, and actually changing something, lifting tax rates upward, extremely difficult to do politically, as we've seen over the last year. I think one of the ways that I look at this latest round is not necessarily a complete capitulation. A capitulation on that upper income, less than 1% of American tax rates, but it's a bit more of a retreat. I think what the Republicans are saying is they're pulling back the line for a couple of months, and they're going to redraw it on the debt ceiling negotiations, which you touched upon. I want to try to understand a little bit about how much leverage the Republicans might have in these negotiations, and I think one way to get at that is do they have a legitimate threat to not lift the debt ceiling? Economically, what would happen if we did not lift the debt ceiling, say, for a couple of months after it expired? Walk us through the economic implications of not lifting the debt ceiling.
Well, to tell you the truth, I don't think anybody really knows, because this is really inconceivable that the United States could actually default on its debt, or at least threaten to default on its debt. U.S. government bonds are worldwide considered the absolutely safest investment in the world. It's a benchmark for having a solid investment strategy, and it's just inconceivable that we could go there. But we almost did, and we might, and the president gave away his main leverage by agreeing to this deal. And what would happen is that we'd either have to start not paying certain bills that are on the books. I mean, not paying Social Security, not paying contractors for their bills. We would have to do that, or it's just inconceivable that we could go that route.
Point of clarification too, that maybe one or both of you can get at, is one of the things that you might hear some fiscal conservatives talk about is, well, even if the debt ceiling, if we don't raise it, we'll still pay the folks that we owe in terms of some of these long-term bills, and maybe we'll get the checks out to Social Security. You don't have to. We'll just cut government. So we'll just shut down all those agencies that don't need to be there in the first place.
I think that one thing that every citizen ought to do, if they're serious about their citizenship, is really take the time to study the budget a little bit and just look at the big numbers, because there is a faith. I found this as a candidate, as just a neighbor. People have this huge faith that there is a gigantic amount of money that you can just eliminate from the federal budget, and it's really not going to do any harm. But when you really come down to it, the federal government in the United States is an insurance company with an army. We run Medicare. We support the Medicaid at the state level. We have Social Security, which is essentially an annuity kind of a product like an insurance company might sell, and we've got a military. And all the rest of the stuff that we do is pretty small, because obviously we have to service the debt. You throw those things in, servicing the debt and those key functions, the rest of it, you can get rid of it, and you're not going to solve this problem. So the idea that you can just go get just cut government spending and everything's fine. No, this is the point where we have to decide really how much government do we want. Do we want Medicare or do we not want Medicare? Do we want Social Security or we not want Social Security? Jiggering the numbers on the balance sheet is not going to solve this problem. And I think what was revealed in this last time, when the public said is, you know, we would rather have higher taxes on wealthy people than give up Medicare. And I think it's time for us all to get honest and recognize that's the long-term choice here. And I certainly agree with Rick. Short-term, austerity is not the right move. But, you know, down the pike, and let me say one last thing, because I did want to say this. Another political failing in this is that if we want to address this problem, one way to do it that's a little bit indirect, but it goes right to the heart of the problem, is to really get aggressive about facing health care costs. But the problem with that is the political system has a very difficult time assessing pain. And if you're really going to get control of healthcare costs, somebody needs to stop making as much money as they are right now. And, you know, I think you could point to the insurance industry, maybe the private hospital industry, whatever. But the political system does very poorly at assessing costs and containing. So right now, we don't have a market in healthcare. We have a very complicated regulatory system that projects out to increasing profits to the point where the entire economy is threatened. And the political system really needs to address that.
I think a great point to be made is that we all want to lower costs, but every single cost in the healthcare system is somebody's revenue.
That is correct.
And so cutting costs is cutting somebody's revenue.
That's right.
And you can expect those folks to
Right.
fight back.
And they all give money in campaigns and to political parties. So that's at the heart of this problem.
So Rick, getting back to the debt ceiling issue, economically, it's just not really feasible for us not to lift it. I mean, could we go into crisis for a week or something like that? Is there an option to?
It's difficult to judge how the financial markets would react if we really did that, but I agree, and I'm not necessarily an expert in that area, but I agree with those who say there would be just there would be panic in the financial markets, and we'd be facing another potential financial meltdown and bringing the economy to a halt again. And I just can't believe that will happen. I hear some congressmen speak that, well, we might as well go ahead and default and show them that we mean business. I think that when we get near that deadline, and if that really does become an option, that the pressure from Wall Street and other places will make these people change their mind. There is the constitutional out. People have talked about that, and there is a possibility that the president can invoke constitutional powers to defend the currency. I would hope we'd never get to that. Even getting to there would be a harmful impact.
And Keith had mentioned something at the outset with respect to the economic versus a political problem. Just your honest opinion on, with respect to, the framework of tax rates and certain, again, components, long-term sustainability of the budget picture economically versus the continuous political uncertainty in terms of where we're going to go and whether or not we're going to be able to get our act together by certain deadlines, in terms of its economic and business implications with respect to investment and hiring. What do you think is the bigger problem, the political uncertainty or certain variations? What's at stake in terms of particulars in the ultimate policy that does get passed?
Well, we do have a long-run problem, and that how we're going to handle that uncertainty has created problems with businesses wanting to invest and wanting to commit. I think we have to once we get out of this hopefully short-term downturn, that we get ourselves on a clear, sustainable fiscal path, and that's going to have to include tax increases. I think Keith laid it out. I mean, you don't have many choices here. You're going to have to increase taxes, you're going to have to cut the military, or you're going to have to cut Social Security and your healthcare system. That's really what the only options are. I think once that, and I think you're right, that the uncertainty about which direction we're going to go on that is right now holding back the economy, and we'll continue to do that in the long run until we get some solution to that. Politically, whether we can reach that, well, I'd have to I don't know. I've seen things happen politically that I never thought I'd see in my lifetime.
Well, let's just go there, Keith. Your opinion on how much of a threat do the Republicans have here, and then just maybe a little bit of look into your crystal ball as we over the next couple of months. What's going to happen?
Well, it's really interesting because although I think that fundamentally the long-term challenges are economic and they're real, some of them just have to do with demographics. We have too many old people to young people, and there's not a whole lot you can do about that unless you want to open up the gates for mass immigration, which I don't think is a popular idea. So there's just not a whole lot you can do. But the real problems we face immediately are political in nature. And I think one of the things that we face is this huge challenge. There are a lot of people who sort of see the president as having been maneuvered here because the Republicans have the upper hand in the debt crisis debate that'll be coming up, because they can essentially hold the world economy hostage in order to do what they want. I find that just inconceivable that people would be thinking in those terms, that you would hold the world economy. And you do have to say the world economy, because if you think about those bonds, everybody knows that the Chinese and the Japanese hold a lot of our bonds. Well, their economy goes down the drain the same as ours does if those bond rates suddenly blow up. So this is just a gigantic big deal. It could have implications for decades to come. And I just think the whole idea that the political system would be playing a game of that size just to win a battle politically is very dangerous. And I think that for what the leadership of the Republican Party has to figure out is, first of all, who they are and what they want. And is it really worth having political victories to play a game of that high of a risk? And secondly, what is the real public reaction when it comes down to it? Because each of these crises have been politically induced and handled politically, and people become more and more disgusted, more and more detached. But we're reaching to the point where the real world consequences of these crises are going to be gigantic. And I think everybody in politics will pay a huge price, and I think it really it threatens sort of the stability of the political system and the viability of it over the long term. So we're coming up to a moment of truth in American history. Do we want American politics to work to solve problems, or are we going to continue with this sort of inside the beltway brinkmanship, where you can risk the entire fate of the world economy just to get the next victory? And I think that's where we are.
That's, I think, a great summary, Keith. We'll definitely be bringing you back probably in a month or two to assess what actually happened and what does it mean. Rick, parting thoughts? We're running out of time here.
Well, I'm just I'm disappointed in the president, and that he had a really strong hand here. He could have let he could have allowed us to go over the fiscal cliff and then come back and propose legislation that would have cut taxes for the would have restored the Bush tax cuts for the middle class, but had gone back to his original pledge of $250,000. That was a winning strategy, and he basically gave away his only trump card. Mm-hmm. And now we're going to get to the debt ceiling crisis. He didn't extract a debt ceiling promise out of that deal, which he should have done. I mean, I'm not an insider there, so I don't know all the details, but now we go into the debt ceiling crisis, and I don't think he has any cards to play except possibly public opinion. But as Keith said, the representatives, they don't have to respond to the overall public opinion. They just have to look at their constituents in fairly safe seats. So I think we got some very difficult times ahead, and I think Keith's right on to say we're really facing a crisis in government.
Well, there you have it. Much has been left unresolved, so we'll have to check back in a couple of months to see what things look like if we resolve some of these crises or just kick the can down the road a little bit further. Rick, thank you so much for joining us on the show. Keith, thank you.
Thank you.
And I'd like to thank our viewers. We'll see you again next week on another edition of Focus One.